Hello and welcome to the last edition of Buy, Hold, Sell for the 2024 season. I'm Huntsley. Thanks very much for joining us. And in the spirit of the holidays, today we're running the ruler over those stocks that have been naughty and those that have been nice. To do that, we're joined by Hugh from Atlas Funds Management and Henry Jennings from Marcus Today. First up, let's start at the top end of town, and by top we mean the very top, the big Australian BHP Group. This one has been a little bit naughty in 2024 with the stock down around 20% year to date. But will it be nice in 25? Henry, is it a buy, hold or sell?
For me, it's a buy here, I have to say. I'm hoping, I guess, it's fingers crossed more than anything else, but there is a theory in the market that you buy BHP at 40 bucks and you sell it at 50 bucks. And it has been in that kind of trading range. And obviously it is dependent on some Chinese stimulus. We are about to enter a protracted, I guess, 4-year war between America and China. And China has to respond in some way. And I'm hoping that their response is to G up their own economy. You know, they've got 17% unemployment between 18 and 24-year-olds. They need to do something, or that will turn into serious civil unrest at some stage. So I think, you know, BHP could be a beneficiary of that. I know everyone's very bearish about iron ore, etc., but I think the copper is an appeal. You know, we know that on electric vehicles, etc. And copper is one of those materials, one of those commodities that does have a shortage going forward. So I think BHP, and also I think the Samarco issue is kind of a little bit behind them now. They at least they've drawn a bit of a line in the sand there. So I think there is some positives for BHP, albeit dependent on the iron ore price, which I'm hoping, even if it stays around 105 and the Aussie dollar stays at 65 cents, that's not a bad Aussie price for iron ore.
Okay, thank you, sir. Hugh, I'm sure you know, and viewers may remember earlier in the year, BHP had a couple of pretty ambitious tilts in Anglo-American before withdrawing its offer. That 6-month standstill mandated by London's takeover rules has actually now expired, and BHP could theoretically launch another bid. That aside, is it a buy, hold, sell, or you?
I think it's a sell.
Yeah.
I think the protracted trade war with the Chinese, I don't know what they're going to do. I don't think it's going to be the 2008 version or the 2015 bridges to nowhere, buy lots, a transfer of wealth from the Chinese taxpayer to Australian miners. I think that's a bit of a hope. But I think the big concern is their itchy fingers. We saw the BHP jet was fueled up and was in South Africa in October. The standstill has come down. Looking at that acquisition, it would have been a terrible acquisition. It would have been the largest acquisition on the ASX, buying a lot of rats and mice assets. Yes, there were a couple of good copper assets in South America, but a lot of assets in South Africa. They're even getting back some of the assets they got rid of in S32. It's going to be massively dilutive. There was going to be a $75 billion acquisition. I think they come back for that. And I'd be very concerned owning BHP in that situation. 10 to 15% dilutive to earnings per share, regardless of what happens to the iron ore price.
Fascinating. Next up, we're talking about Zipco. This one has had a wild ride over its lifetime, surfing the buy now, pay later wave, both up and down, before seemingly finding some solid footing. Hugh, is it a buy, hold, or sell?
Well, I don't know it as well as Henry. Henry's done fabulously out of it. It's up 725% this year. But when I see the founder selling $100 million of the shares yesterday, he knows more about the stock than me, so I've got to take it as a sell.
Okay, interesting. You're reading the register, as it were. Henry, the stock is up a massive 429% year to date, so it would be most likely on most people's nice list, if you like, but can they continue in 25? Is it a buy, hold, or sell?
I think it's a hold from here, only because it's had such a stellar performance in 2024. But the US consumer is still spending money. You know, Black Friday, Cyber Monday, etc. They're still spending money. What they have discovered is a whole new way of paying for things. Who would have thought? And it's called buy now, pay later. And the youngsters don't want to get involved in credit cards. Some of them can't get credit cards. And Zip has done very well pushing into the US. There is a float, there is an IPO later this year of Klarna, which could put a bit of a valuation sort of liquidity event to give everybody else a bit of benchmark in terms of how that goes. So that'll be interesting as well. But I think, you know, this is a US consumer story in changing habits, and the consumer there wanting to buy stuff and finding new ways to buy stuff. And some of the regulatory issues are behind it, and they've certainly done very well in controlling the bad debts. And they are rolling out new products. You know, I've got a Zip account. I don't use it very often, but I signed up just to see how it worked and get a feel for it. And it's, you know, it's useful, especially for budgeting purposes. And you're not paying any interest, and you're paying 25% on your credit card. Which one do you pick when you go to the cash register? I know which one I pick if I have a choice.
There you go. Thank you, sir. Last one before we get to your naughty picks. We're talking Incitec Pivot. Now, here, this one is actually on your Dogs of the ASX list. Fell 20.
I picked it as a.
Oh,
as a
very
rebound,
good.
so
Fell 20.
on Livewire.
Yeah, oh, very good. You can read that every year. You usually publish that every year. Fell 20% in 2023 before rising circa 25% this year. I'll come to you in a minute, but Henry, we'll get your take first. Is it a buy, hold, or sell?
I think it's a hold. It's performed pretty well this year. They're looking at, once again, the fertiliser business and pushing that out. They've had some pretty good growth out of explosives, Dyno Nobel, which has been very good. They've got a relatively strong balance sheet as well. So I think for me, it's a hold here. It's had a great run. Hugh's, nailed it with his Dogs of the ASX.
I don't normally get them right.
Clock every once a day, twice a day. It's right. I feel like that sometimes, but it's it has got a lot of positives to it, and we are seeing a commodity. I mean, it may not feel like a boom for resource stocks, but there's still a lot of exploration going on. Whether it's in coal, whether it's in we got President Trump saying drill baby drill. That's not going to be quite so good for explosives. The two don't combine very well, but gold, iron ore, all these things. People have still got to do this. So I think for me it's a hold up here, only because it's had such a good year.
Hugh, can it continue to be nice next year? Buy, hold, or sell?
Still a buy. They had a great result in November, but I think the quantum of the buyback, I think that's what people ignore. They're buying back over 15% of the company of the balance sheet. In the market every day, buying circa 10%. That just was lifting all the boats and also decreasing the divisor for future profits. The result in November was very good. Explosives, very strong, repricing that. And I think the Trump presidency will be very good for them. One of the high margins areas for them is quarry and construction. So that's blasting through rock, which goes into infrastructure projects, not in drilling. And things are looking relatively good for the upcoming year. With the explosives earnings, they're pretty predictable. They have long-term take-or-pay contracts that are being priced upwards. Fertiliser, if they get that away, there'll be another buyback coming on. You can't fight against the tide.
Yeah, absolutely. All right. Well, it's time for some fun to end the year. We've asked the gentleman to share with us a stock that could be on the naughty list this time next year. Could be a name that has done well this year but won't be able to maintain its good behaviour, or it could be a naughty stock that hasn't learned its lesson. Hugh, I'm going to start with you. What's your naughty stock, as it were?
Well, for having done this Dogs of the ASX for over a decade, I picked one of the stocks that have done quite well that is a frequent feature in the dogs, AMP. They had a bad year last year, down 25%. Things were looking pretty grim. And then a big bounce back, 70%. And this is always a sort of a feast to famine, or famine to famine to famine, a little bit of feast. But ultimately, the business seems to get worse each year as they sell off bits of it. I think about what's left, looking ahead to 2025. They've spun off the advice business. What does that look like in terms of flows? Because you've got to imagine some of the newly independent financial advisors, are they going to put a full suite of AMP products, so further outflows? The bank is subscale. We're earning sort of 1% net interest margins with a 5% ROE. They've got great plans to become a business bank, but it's a very subscale thing. I think what's left, there's still a lot of overheads. I think plenty of scope for that to be naughty again in 2025, as it has been many times over the past decade.
Yeah, well, it's an interesting call. I mean, it's up around 70% this year, but as you said, there's some long-term problems that do need to be resolved.
It was $20 20 years ago.
Well, there you go.
It was 47 at one stage.
Oh, is that on the day of the float?
47?
Yeah.
My goodness, on the float day.
$1.60 now?
Yeah, well, there you go. Henry, what about you? What's your naughty stock for 25?
I'm going to be quite controversial and certainly go against Hugh. My naughty stock has been a nice stock this year. It's Resmed,
right?
Which has had an amazing fall due to the GLP-1 concerns, and then everyone went, oh, you know what? That's not going to hurt it, and up they went again. Margins were back. Mask sales were back. Rest of the world sales were pretty good. Maybe not so good in the US, but the rest of the world sales were good. And they brought out a new model, the AirSense 11, and they're bringing out a new mask as well. The thing that always troubles me with Resmed is that they have to keep finding new people, because not everybody wants to look like something out of the Dam Busters or Top Gun, because that mask is not great for your romantic sidelines, unfortunately. So people do tend to give up with the treatments, and as a result, they have to keep finding more and more people, and they keep having to dress it up as something that's really high tech. But at the end of the day, it really is just blowing air up your nose and into your mouth. It really is. So I think that's a problem for them, and clearly they've recovered well from that GLP-1 scare. But I think that's probably now in the price, that it's not going to be so scary, and now it's coming down to the more mundane. And when you look at, I know it's Black Friday and Cyber Monday, etc. But when you look at the offers that are around, suddenly the AirSense 11 has gone from $2,100 to $1,800, and you get a free mask, and the 10 is now $1,200, $1,300. And you get a free mask. So the prices are coming, and these are from Resmed sellers. So the prices are coming down. So I think maybe it's just topped out. I know we all love it, and it's a great Australian success story. Interestingly, I found out that it was bought from Baxter.
Really? Okay.
It was a management buyout by the guy's dad from Baxter some years ago, and they thought it was a great idea and ran with it, and they've done extraordinarily well. I just think it's just getting a little bit up there for me. So 25, maybe a pause, a reset, and maybe we'll see more of these GLP-1 drugs come along, getting cheaper as well, which is a big thing.
So a thinner population suddenly?
A thinner population, and they don't need to look like Maverick in Top Gun.
Yeah. Well, that's it for Buy, Hold, Sell for today and for this year. Thanks to the team who put the show together, because I'm the one who's in the chair for the last show, I get to say that. And to all the guests for your insights, Hugh and Henry, thank you very much. And of course, for you, our audience. We wouldn't be here, wherever here that is, without you. Have a great summer. We'll be back in February with more Buy, Hold, Sell. In the meantime, you can subscribe to the Livewire Markets YouTube channel, as well as our website, and give this video a like. We're always adding great content, even over the summer. Have a great time off, and we'll see you soon.